Hello, I'm David Frazier, aka the Market Monk. Well, the major stock market indices around the globe were mostly unchanged again today on Thursday, May 1st, with stock prices in India on average pulling back a bit today, and the major stock market indices for Europe moving a bit higher today. But here in the United States, as well as in most other regions of the world, China, Brazil, Japan, stocks on average, as measured by the major stock market indices, were essentially unchanged. For example, the Dow Jones Industrial Average was up a little over 20 points today. However, we did get some more very positive news today regarding the U.S. economy. Specifically, we got some reports today showing that construction spending here in the United States rose 8.4% during March after rising 8.1% during February. Now, if you listen to any of the major broadcast financial shows, you'll probably hear the folks on those shows tell you that construction spending was not up as much as Wall Street analysts had expected. Well, I couldn't care less about what Wall Street analysts expect. I mean, these guys, as a group, that is overall, tend to be really bad at forecasting the direction of the economy in any given country, and they tend to be pretty bad at forecasting the direction of stock prices overall. I mean, I'm just telling it like it is. That's what we do here at Frazier and Mayer Research, who produces this Market Monk show. We tell it like it is. We just tell you the facts. I don't care what these analysts, these so-called analysts, for the most part, a lot of these analysts actually spend a lot of their time in sales activities versus doing a thorough research and analysis. And of course, there are some very good analysts. I'm just talking about as a group. So I don't really care what their expectations are. Couldn't care less. The fact is, construction spending has risen, trended higher for, oh my gosh, since February 2011, has consistently trended higher. And the pace of activity in the construction market accelerated during each of the past 2 months. Excuse me, please. Now, we also got some positive news from the Institute of Supply Management. That's an organization that does surveys every month regarding the expectations of purchasing managers at U.S. manufacturing companies. And they've been doing this for over 50 years. Those they're not just expectations. They're both surveys whereby the Institute of Supply Management ask purchasing managers at U.S. manufacturing companies what's been recent activity at those manufacturing companies. Did it recently increase, decrease, or stay about the same? And what are their expectations going forward? And based on last month's survey of those purchasing managers, as a group, those purchasing managers said that they had seen an increase in manufacturing activity during March and April, and that they expect to see, based upon orders that have been coming in, they expect manufacturing activity to continue to increase during the month ahead. So that's a really positive development. I mean, the Institute of Supply Management's index of manufacturing activity has historically been an extremely reliable leading economic indicator. So that's a very, very positive development. Not only has this index been in positive territory for 11 months now, meaning that manufacturing activity expanded over each of the past 11 months. But in addition to that, manufacturing activity actually accelerated during each of the past 3 months, and at a faster and faster pace during each of the past 3 months. So that's a very positive development. Now, let's move on to the last economic statistic that I'm going to mention today, and that's the latest reading on personal consumption expenditures here in the United States. Personal consumption expenditures, and I'm just looking at my notes when I look here to the left. Personal consumption expenditures were up 2.9% during March, after rising 2.4% during February, and rising 2.3% during January. So not only have personal consumption expenditures risen over the past few months, but they've risen at a faster and faster pace. That's extremely significant, and the reason being is personal consumption expenditures tend to account for approximately 68% to 70% of the total output of goods and services here in the United States. So these are very encouraging developments, and once again, as I've been saying for the past several weeks, my research indicates that stock prices are going to trend higher and substantially higher during the second half of this year, and that's because a very large number of leading economic indicators, as well as stock market indicators that I monitor on a regular basis, have just been they've been improving. So I think that's all there is to say for now. We do have a very, very important report out tomorrow morning. That is on Friday, May 2nd at 8:30 in the morning. It's the non-farm payrolls report, the jobs report from the U.S. Department of Labor, and I expect that report to show that the employment situation continued to improve in the United States during April. And so we'll see what happens, and I'll speak with you again tomorrow. Thank you.